Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Christian Larson. Live in faith that the whole world is on your side so long as you are true to the best that is in you. Market-wise, let's take a look at it out here. We had the Dow Industrials down 86, NASDAQ off 19, S&P's off 9.5, all with volume, folks. Downtown with volume. Gold contract down $1.70, trading at $1,191 an ounce. Silver off 6 cents at $16.51 an ounce. Platinum, $1,144. Light sweet crude up 22 cents, trading at $60.61 a barrel. Bonds, we had the 10-year down 10 ticks, 127.03. 30-year off 1 point plus 23 ticks at 154.11. And the market, folks, is basically freaking out because the rates are going higher, bonds are going lower, and that divergence has changed, specifically meaning that normally when markets go down, we were down about 140 points out here today. The market bounced about 10 S&P points in the close. Bottom line, you expect bonds being up. Guess what? Dynamic has changed. Dynamic, I suspect, has changed the end of the 34-year bull market in bonds. That 34-year bull market, by the way, folks, it goes from 1981, and if in fact it is the top, it looks to me like it is, meaning on February of this year, rates had gone from 14.5. They were 14.5% in 81, down to 0. So you can see that technically they're coming off the high with volume. So that means lower prices coming at us, high yields are coming at us. Fundamentally, it's like, can you go negative? Yes, you can. They went negative in Europe. So bottom line, you can go negative. But you can see the probability is that that's the end of a 34-year bull market in bonds. King dollar. King dollar down 987 ticks at 94.21. The euro up 160 at 113. And the yen trading down 38 at 119.48. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the SPY, we take a look at the SPY. What you're going to have out here is this. We got down to a price point of 206.76. You bounced at the close. Big deal. You're going to get bounces out of here, folks. You did 128 million shares. Bottom line, what is it going after? It's going right after the 206. Oh, actually, that's pretty wild. How did that do that? 1 second. It got, when I was on the last hour, I didn't realize that it actually hit that. Oh, so it hit, this is what it did. It hit the 17th. You know, when I started the show, it hadn't been at the April 17th swing low. And that's what it wanted to do, and that's what it got. It got down to 206.76. 207.01 was the swing low. That was 191 million shares. We did 128. Okay, so what do we have here? Bottom line, yeah, you can get a small bounce out of here. That small bounce, I expect you can get up to 209.33. So we'll see how that shakes out. That's on the daily. Now watch what happens on the weekly, and that's a short-term phenomena. On the weekly, what you have thus far is we're at 128 million shares. That's in 3 days. No, not 128 million. We're at 312 million. And that basically is not monster volume on the way down. That's the reality. It's heavier, but not monster. Take a look at the 3 Qs. The NDX 100, what you have inside the 3 Qs is this. 3 Qs get down, close out at 106.71, and that still wants to get into lower price. The April 17th low on that is 105.55. We got to 105.99. The IWM, now the IWM led off the highs, meaning they took that south with the vengeance. What the IWM did out here today, IWM goes down to 120.24, has lighter volume, rejects that price. That's basically saying the IWM can bounce. So it's going to be interesting to see where this shakes out. In particular, what is interesting is that inside the IWM, of course, is that you have a lot of commodity stocks. And I'm going to switch gears on you and go right over to the gold contract. No, dollar first. And the reason being is this, is that there's a disconnect, okay, in a big way inside the dollar index and gold. The dollar index today did an ABC structure on the way down, wide price spread, accelerated volume, you know, bottom line, you're at 94.21. That thing wants to go to about 92. Now, we go over to gold, we take a look at gold. What do we have with gold? Bottom line, gold couldn't get out of its way. It backed down. Now, it did back down with lighter volume. That, to me, is building cause for higher price. You know, why? Because what we had done is that we had broken the lowest swing point last Thursday, broke it with lighter volume, rejected the low, moves into higher price. So that dynamic inside that's going to be wild, watching how this whole thing shakes out. If we go take a look at the TLT, the 20-year plus bond fund, the 20-year bond fund today had an expansion of volume. We did 14 million shares. We're at 120.56 right now. And what that sets up, this is nasty. So check this out. Ooh, baby. This is going to be amazing. This looks, you know what this is going to be, folks? Whoa, baby, watch out. Your A point, this is going to be an ABC down on a weekly. Okay, so your A point's 138. Your B point is 122. So you get 16 bucks. Your C is 132. So you're dealing with 116. Thus far, the B point on the weekly has 54 million. And we're already at 37 million. 37, 47, 57. You can do it. So this may just, you know, when you're doing an ABC structure on the way down or the way up, the A to B point, folks, and the C to D are straight line moves. And in this particular case, that's what it looks like we have. Now, what that will do, that'll run the 10-year into about 2.5. We're at 2.2 right now. The low that was generated in this 10-year was 1.68, I believe. Bottom line, if you need a mortgage, go get it right now. You know, I don't expect rates to go through the moon, but guess what? 30-year mortgage at, you know, 4% is a nice little deal. Let's go over to Whole Foods. Whole Foods, there's a lot of numbers that we're going to have for you out here. If you want to see a classic, you know, fill of the gap, it's going to be Whole Foods, okay? WFM, we take a look at this, what you're going to see. First, we'll take a look at what it's doing after the close. It closed at $48. It's trading at $42 right now, and it's about as clean as you can get. There's a gap that's wide open. That top of that gap is $40.64. Let me pull this back for you so you can see how this shakes out. If you have equities, folks, that are coming off the highs, and you have gaps below them, right? I don't care how far those gaps are down below them. Get your stop in. Do not let this go all the way back to the gap. This stock has gone from $57 down to $42. You know, 57 was the high that was out here on February 17th. This gap that's wide open is $39.79. Right now, this equity is trading at $43.19. That gap's going to get hit. It's going to get hit probably more than likely tomorrow morning. You know, so, you know, be prepared for it. Hopefully you don't own it. Let's go take a look at CREE, C-R-E-E, see what they have to say. Where is she? Okay, so, no, wrong one, sorry. Corrig, GMCR. So you have Corrig Green Mountain, that little baby. Okay, she closed at, oh, that's right, this is going to be halted, I think. Okay, so this is going to be cool to see what happens here. This stock closed at $110, and what do they have to say? It's hard to tell whether they halted it for news or just news that they're Oh, yeah, so this thing's going to get toasted and roasted when it opens. This is what it is. They halted it because their sales were the mid-single digits, and they had saw the mid they had said a lot higher price. That's the bottom line. You stay right there, folks. Coming right back.